Okay. This is wait for it, and let's take a moment to cover and appreciate what we have on the screen here. And some of you are going to be like, "Oh, that's too much. It's crazy," or whatever. And I don't care. That's fine. This is not for you. Just go look somewhere else. Now, this is all my ideas brought to life by AI, and then I brainstorm with AI to tweak and come up with new ideas based on my methodology on like what I'm thinking. Like so I feed my AI exactly what I'm seeing and what I'm thinking and how everything should work and feel and then I give it the logic and it creates we create these indicators. And so it's multiple this is probably like I don't know 15 indicators, maybe 20, or maybe it's like 10 indicators with like 10 different revisions and extras added to it, however you want to look at it. But this is a culmination of a lot of ideas put together, and it was really clean, and it has gotten a little more busy than I wanted it to, but I've grown to appreciate what I have here, and so I'm gonna start stripping away some of the different layers here, and so we're just gonna look at this layer right here, and so when you when you see this, this is a threshold. It's just I call it threshold trading, right? And so the potential, or I guess the amount of movement to the downside past the average move. And so if you were to look at, let's say, like this move here, and obviously that's your average move between these two candles right here, or these all these candles right here, right? This is your potential move. And so anything outside of this move would, to the downside would add to the upside. And same thing, everything, as it's going up, so this is going up. So that everything as it's going up, the more over average is being added to the downside, right? And so as this is going up, you see that the downside is down here, like it's expanding to the downside down here. And so this is where price would need to go. It needs to get to this red line in order to balance out itself. And so as it starts to come down, you see that the red line starts to come up and meet it. And then what you want is you want the price action to break that bottom threshold. And so this is what's called liquidity, right? And so it's just a different way of looking at liquidity. And so it's grabbing this liquidity. And so when you see these candles, and we'll get into the colors of the candles later, but you'll see when it comes down, it hits and it breaks this line twice, once, twice, and then instantly starts going up, right? And comes after it goes up and it closes above these lines right here, it wants to come back down and retest this low and grab whatever, just to make sure it can't get past this low. Like this is the true like support, right? And so it retests this and it grabs all that liquidity right there and then it launches again, right? And so then it shows that it can go higher here, right? And so it continues to push and then tries to retest again and it continues to push and it's not breaking these lines right here anymore. And now what's happening is you're getting this blue line going across the orange line, right? And these are moving averages. And so everything is based on a cycle theory as well. So we're just going to bring in another layer of the onion here. And it's, I'm a cycle trader. I see the market testing and retesting in a cycle, right? And so uh, every so many bars it's going to go up and then come back down, retest and then come back down and then retest and try to break that high. And so now we're at that part where it's come all the way back around and it's going to retest this high. And once it does the exact same thing as the red over here, broke it twice, boom boom, it's going to push back down and retest and see how far down it can get. If it can't get past these lines and it can't break this this low here, then it's most likely going to turn around and go right back up. And so again, we've got threshold trading. So it's an envelope that's created by the movements to the downside, creating the upside, and the movements to the upside, creating the downside floor, right? And then We have cycle trading. So every X amount of bars, you're going to see a test and a retest. But that's all your volume and all your timing and everything is going to be based around this timing, right? It's going to look back this timing, this X amount of bars. And so now you see these lines coming off these candles here. And so when a green candle closes up and it expends more volume than it did over the whole cycle, it's going to leave this green line. And so obviously for this green line to show up after this one, it means that this volume had to be higher than this one. So I can just, instead of having to like, like hover over every single candle to see which one had more volume, I can just intuitively tell that we're expelling a lot of volume trying to go up right here. We had a red candle down here and we continued to go up because it failed to go down and closed back above this right here. And we're pushing again right here into this area. And then you see this candle and it turns into an indecision candle and it leaves this, another green here, meaning that it expelled more energy trying to go up and it failed to even get to the line, which means that it needs to come back down and retest, right? And so then it comes and breaks this, this area right here, grabs this liquidity, breaks this level right here, which is what would happen, and then goes up, shows that it still didn't make it to the high there, so it goes pushed back down, fails to break this low right here, so it has to push back up. It does break this high right here, so then it continues to push up, but it fails to make it to there, so it pushes down again into this area, fails to get past that teal line, which is just basically these lines are based on my cycle and a half cycle. So the more aggressive line would be the half cycle, which is the teal, and once the teal crosses the orange, becomes more into a profit zone, like it goes in more into like a profit run, right? And so that's how that works there. Now the color of the candles is based on volume, and so whenever a uh, blue candle closes, it means that it closed higher than a full cycle back did, and but the volume was less than a full cycle back, so with less volume it's up higher. And then when a green candle closes, that means that it closed higher than a full cycle back and it also had more volume than a full cycle back. Now, when a orange candle closes, it means it has less volume than a full cycle back, but it closed less than a full cycle back as well. And then when a red candle closes, that means it closed lower than a full cycle back and it had more volume than a full cycle back. All right. Now, there are other colors in here that aren't particularly on the screen. We have these like neutrals. I believe this is when it closes at the exact same close as a full cycle back, right? So it just makes it nothing, right? And then there are, well, you're not going to see all the other colors. This is the colors that are on this right here. So these are your mainstay colors that you have. And so just by looking at the screen, you can just say, okay, well, or at the chart, you can say, all right, well, we've got some disinterest in this area right here, and it's kind of like, I guess, fatiguing out, right? So it needs to come down and grab some liquidity, and so it over time it built this little level here, right, where liquidity hasn't been broken into yet. And so that's what this push down does, is it cracks this, and you can see the line bends twice right here, two different, once here and then again here, even further, and that dips into this liquidity, and that hasn't been touched over the full cycle, right? And so coincidentally, over this full cycle, it was just enough liquidity here that that's why they do this mess right here, is to keep it up above this area, is to build this little liquidity area for it to come in, tap into, and recharge itself, and then take off, and hopefully it has enough energy to break out of here. Now this has been a bitch, and I'll show you why, because once we get past this part, you'll see why this is just stagnating for so long in this area. All right, so now we're going to add another layer to the thing. And so this is a gradient. I haven't really used this yet, but it just kind of shows you that you're underwater right now. So as it gets above into this yellow area, that's where the true profit area runs. So even though it looks bullish right here, it's still not quite out of the woods yet. And that's why you're getting all these indecisions right here, right? Another thing that you can look at is uh, this is introducing these dots right here, these yellow dots, and then these crosses going up right here. Now these are the 4-hour versions of these two lines right here. And so this is in a very important situation right where it's at right now, because once this cross gets above that orange, it's almost going to be in full profit mode, which means it should just all of a sudden get a resurgence of like just pure momentum going up. Like it should just move away from here. That's what I anticipate, because that's what happens whenever the small ones crosses. But this is a 4 hour, so it should be much stronger. But it also makes it dreadfully slow in this area until it actually does it, because you can see it's taken. This is an hour chart. I mean, it's taken all day for it to get to where it's potentially going to cross. It still hasn't crossed. It's still going to be another hour, maybe. All right. There are some other things showing here, but I'm not going to get into those yet. I'm going to turn this gradient off because I don't really trade with that on. I just flip it on and off whenever I want to see where it's at. So we are underwater still, and that does make sense because you're still seeing a lot of indecisions here. All right, this is the combined indicator. This has got everything together in it. That, well, technically it's all already here, but it's the same indicator as the other one. It has the exact same logic in it, but we've added some tweaks to it. And so you're going to have this new color here, which is the pink, and that's basically saying that it's within a percentage of this threshold right here, within a distance. Let me think. Let me look. Is it that? Is that red? No. It's an upthrust that's more than 150 of the volume over the cycle, right? So it's whatever the average is of the cycle. This is 150 of that volume. That's what that means. And so whenever you see this close to the bottom here, or especially on this retest right here, which is a good timing right here. So like you have this break of this threshold, it bends down. You come up, you come back down, it pushes down. You can tell that they really were trying to break this level to get liquidity. So you can rest assured that they actually really put forth the effort, and it's not manipulation. They really, no bullshit, really tried to fucking break this level, because they put 150 of the average volume that was here to try to break it. That's more volume than all these candles right here, and it didn't. And so then that's why it's heading up from there, is because it couldn't do it. And so when they did the exact same thing, the next candle, it ended up closing above it, and so that's why it's in an upward movement. Now, these lines right here are to represent it's kind of like your hidden pool, like your hidden liquidity area, but also shows your range over a half cycle. And so it's saying that price action really over a full cycle, because it doesn't, even though it only connects to a half cycle, it's basically telegraphing where the low or the high of the candles over here to the left were at some point, or the low or whatever. It's telegraphing this ledge over here. It's just being carried forward like that. And so it's saying that over a cycle, this is your range of like how far your candles have moved. And so you can tell like when you're consolidating, because it gets really flat, right? And so this is what consolidation looks like, is it looks like it's flat. But whenever you come in and you tap into this area, it's like a pool of liquidity, because it only produces these lines where there isn't candles, basically. So it gives you that little area where it taps into it. So it kind of gives you an idea of like where these pool of liquidities are, just visually, without saying, without having to like guesswork it. And let's see. You got these HTF 9 and 34. These are your higher time frame 9. So this is in a higher time frame 9, which is this one here, and that's your higher time frame 34 right there. And so that will be your, whenever your bars are closing, like it's coming from underneath and it's closing above one of these, you get it. So it closed over the HT9, or it closed under, it's signaling that. And then this one closed over the 34, so it's signaling that. Just in case, it's just a quicker way to like see that it's happening in case you lose it in the background there or whatever. And then now we're going to add in the volume circles here. And this helps with visualizing how much volume really is going into everything. Your little white dot here is about 115 in volume going into this candle. Um, and I guess it failed to go up there, or maybe so they gapped it down or whatever. But then they put 115 in this one and it failed, and so now it dumped. So it's two right there that failed, and then here you got orange. So yellow is going to be the next one, which I believe is like maybe 130. Orange is like 150. I want to say like red is like there's a red circle. It's like 200 or and then there's another color. I want to say it's I don't see it. I don't see the red one either though. There's red. Um, there's a 300 maybe 250 and a 300. I think this was the 300 is the aqua. And there's another color there that you didn't see. That this purple right here. Purple means that it's whales are buying in. Like that means like there's like a lot of buying going on right here. That's abnormal compared to your last 34. And so we assumed that whenever that's within 1% of this threshold right here, that's whales buying, right? And that's institutional buying, and it's getting ready to launch, right? And so it does that right there. So that's kind of nice to have as well. But these volume circles here are really nice to have because they change as the volume grows. They just change out, to the next size. So it helps to visually see like, hey, they're really trying to put in a lot of effort right here to get this to go, and it's failing or it's launching or whatever. Another great thing about these volume lines is you got the red ones that come across here as well whenever it's a red candle and it closes, or it's I don't know, that doesn't look like a red candle, but whatever. Um, it puts this ledge out, and so typically you'll see price come down and retest these. Like whenever you have these ledges, it'll come and break these to grab that liquidity underneath it and try to go up. So whenever you have a more open chart, you'll see these ledges here, and they go back 9 candles. So it helps to, kind of gives you like another sample of X amount of candles to kind of gauge your, like what's going on. Like, okay, well, 9 candles back, we're going up here now we're back to going up again. So in less of that time frame, in 9 candles, we've made a push down and come back up and recovered back above this area. So it just kind of helps to see that it's more bullish, I guess. And with timing, it's kind of hard to describe, but like unless you're really focused on the timing of the market, like how many bars have passed and stuff like that, none of that really means anything to you. But I can't tell you how many times that you know it'll it'll always just pivot right on those numbers. And my numbers come from a dream. It's super weird, but whatever. But yeah, that's it. This is my all my indicators that I use now, and I don't know. It's just super simple to trade now because I mean I use it on crypto. I use it on options. I mean I use it on stocks. I mean, whatever. This is the key moment right here. This is really where you should be getting in. I'm already in on ADA because I just knew it was going to happen, and I didn't know if it was going to happen overnight or not. So I just got in, but I'm already in on this. Um, just waiting for it to cross over this line right here. And but yeah, whenever you see I guess the key thing is the way it works is you want to see this push down of like red bars coming down and then breaking this threshold down, and then you want to see like this, you want to see increased buying as it's going down, right? And then when it goes up like this, you see how it stops buying as much and then comes down even deeper, and then they start buying again. That's probably your cue that this is about to go, right? And so then when it breaks this here, you want to see it break the green one next, you know. And so it goes up, it breaks the green, or breaks the bottom one, then it breaks the top one, and it makes it above this teal and this gold. And right now you can see that the teal is underneath the gold, which means it's somewhat bearish, right? But as the teal gets above the gold, that means it's trying to consolidate or trying to get to a place where it can be bullish, right? And so we're getting close to the end of this, this downward spiel here. And so we know that once it hits this green one, it's going to come back and retest this low, right? Well, coincidentally, the red part comes up to meet it, and so when it breaks it, it's breaking it higher than it was down here. It doesn't have to come all the way back down again. And then it consolidates here. and goes up again, fails to launch here, but it does make it above both lines, but fails to hold.